In this video, we will explain how financial transactions flow through KostPadi and eventually appear in your financial reports. Understanding this process is extremely important because every report in KostPadi is generated directly from the transactions you record in the system. This means that the accuracy of your reports depends on the accuracy of the transactions you enter. Once you understand how this flow works, it becomes much easier to troubleshoot financial reports and maintain accurate records. In KostPadi, financial data flows through four main stages. Business transactions occur. Transactions are recorded in the system. Transactions update the chart of accounts. Financial reports are generated from the updated accounts. Let's look at each of these steps. The process begins with normal business activities. Examples include selling a product to a customer, purchasing inventory from a supplier, paying rent or salaries, receiving payment from customers, purchasing equipment. These real-world activities are what generate financial transactions in your business. The next step is recording these activities in KostPadi. There are several ways transactions can be recorded in the system, including posting sales, posting purchases, recording receipts, uploading and categorizing bank transactions, posting inventory movements, posting journal entries, recording asset purchases or depreciation. Each of these actions creates accounting entries in the system. Once a transaction is recorded, KostPadi automatically updates the relevant accounts in the chart of accounts. For example, when you record a sale, the system updates the revenue account. When you record an expense, the system updates the expense account. When you record a customer payment, the system updates the cash or bank account. This ensures that all financial activity is organized correctly within the accounting structure. Once the chart of accounts is updated, KostPadi can automatically generate financial reports. These reports summarize the balances of your accounts. Examples include the income statement, which summarizes revenue and expenses, the balance sheet, which summarizes assets, liabilities, and equity, the cash flow statement, which shows how money moves through the business. Because all reports are generated directly from the chart of accounts, they always reflect the most up-to-date financial data. Let's walk through a simple example. Imagine your business sells a product for $1,000. First, you record the sale in the system. KostPadi updates the sales revenue account and the cash or receivables account. Next, when you generate your income statement, that sale will appear under revenue. At the same time, the balance sheet will reflect the increase in cash or accounts receivable. This is how one transaction can affect multiple financial reports. If a report appears incorrect, the issue is almost always related to one of the following. A transaction was not recorded. A transaction was categorized incorrectly. The wrong account was selected. The date range of the report is incorrect. By reviewing the transactions and account entries, you can easily identify and correct these issues. Understanding how transactions flow through KostPadi is the key to maintaining accurate financial records. Every financial report in the system is simply a summary of the transactions recorded in your chart of accounts. In the next video, we will explore two important tools used to verify your accounting records: the trial balance and the general ledger.